Hi traders, welcome to TCM Education. In this video we want to recap the first week of earnings and focus on 4 stocks that reported earnings, and following the earnings there was a great intraday price action. Keep in mind that this is only the first week. We are heading into another 6 to 8 weeks of let's call it chaos in individual stocks. The market actually did nothing this week, but kept climbing to fresh all-time highs. We barely moved up 0.25% this week. The reason for that, the financial sector and major stocks that reported earnings from the financial sector, those did nothing. I mean, the response to earnings in the financial sector was totally numb. JP Morgan, Goldman Sachs, Morgan Stanley, BAC, Citigroup, none of which was either a disappointment or either a 5% mover, nothing. So the rest of the bunch was important stocks. For example, Taiwan Semiconductor, a $1.25 trillion dollar company, reported earnings. Johnson & Johnson, United, Interactive Brokers, 3M, Schwab. So among those stocks, I picked 4 I think they were the best in terms of intraday response. Let's check out the first one. You can see it already. 3M. Sorry, not 3M. 3M is the last one and the weirdest one. So that's obviously Johnson & Johnson. Huge move in the first minutes. Huge pickup in volume. Exactly what you want to see. And that's also very important. It involved breaking the 160 round number. It actually gapped up a couple of cents, like 20 cents above, 25 cents above 160. So it wasn't like a perfect setup to buy at 160. You needed to go to 160.50, but the risk reward here was very good. The stop loss was 25 cents under 160 for those who are using tight stop losses, meaning using the lows of the day. It worked to perfection in the first minutes. Then it pulled back, delivered the channel. So overall the price action was nearly $6. If you capture 4 out of these 6, that's great. And then it pulled back and did nothing until the end of the trading day. So again, if you did not enter though in the first minutes, you had a problem where you needed to enter this channel. And when you trade a channel, you need to foresee the pullback to the green line. So if you are able to do it, which is not very easy, then you had a great trade here in JNJ. If not, you look for other trades. I mean, obviously the 160 to 161 or 62 were great trades, but there was a pullback to 161 for maybe a split second. So overall, great morning, but it didn't close like at the highs of the day or anything like that. So there was so far no continuation to this move, and the stock reported earnings on Wednesday. So that's Johnson & Johnson. Probably the best long play on earnings that I've seen. Maybe they were better, but this is the one that I've seen. Moving from a winner to a loser, this is Abbott Laboratories. The stock delivered earnings that were, as you can see, a disaster. The stock started breaking down at 126, stopped moving lower above 120. Basically a terrible earnings report, and the same phenomenon, a pickup in volume, nothing like spectacular, but this one delivered $6, which is 5% down, including the gap that's more than 10%, including the gap. Then reversed and ended up closing not at the lows of the day, but near the lows of the day. Again, it shows that on earnings you need to act decisively. Sometimes it works, sometimes it doesn't work. This one, those who acted decisively and shorted either at 126 or either at 125 got paid big time on ABT, but it wasn't like a home run trade. Clearly not a home run trade, because once it hit the 120, it started basically to reverse. You can see this nasty reversal, then came down, then up, then there was another bear flag formation that could have been shorted between 121 and 121.70, but it yielded maybe a scalp play, nothing more than that. So again, the money trade was clearly in this early morning move. Those who missed it needed to really fight for a trade, maybe from the VWAP down. So it wasn't a sweet ride, let's call it, after the initial sell-off in the morning session. Again, weakness, gap down and go, work to perfection. This is clearly a relatively easy trade, actually. Another stock that was a clear gap down and go, that's ASML. It was like there was a projector on ASML down 8% following earnings. That's a mega stock at 750 or 820 before it dropped like a stone. There was an opportunity to short it here early in the morning. If you didn't act, it's at 750, which is a round number, and you needed to act. If you didn't act, that was pretty much it. I mean, that was the only good short opportunity. It worked for 3% down to 730. Then the stock reversed. You would expect it to reverse down from the VWAP. It actually moved higher. So the only short opportunity was this 750 short in the morning session. This was, and you can see the huge volume. Again, gap down and go. Not a big or amazing move, but enough to create a profit cushion. And if you waited for more downside, you ended up with nothing on this trade, but clearly not a loser. So it's a matter of strategy. You enter at 750 and you take some profits, or you wait for the big down move to maybe 700, which was another 4%. It wasn't meant to be, but we're looking at the initial trade, and then obviously the initial trade, and then the trend totally changed. Thinking about this trade, obviously, when you're trading a $700 stock, many people for some reason avoid it. You can switch your mind, and instead of trading cents, trade a position, $10,000, $20,000, $30,000. If you trade a $10,000 position, it's 12 shares. You trade a $30,000 position, is 40 shares or something like that. So it's the number should not matter that much. If you risk 0.5% on $30,000, that's 150. If you risk a full 1%, that's 300. So from that point of view, it's way easier to manage. Having said that, again, I can say that this is a disappointing move, because on one hand the gap was huge, on the other hand moving down 3%, obviously it obviously created actually a buying opportunity because of the huge gap. Okay, let's move to number 4 and the most interesting play. Obviously the weirdest play, and obviously the riskier one, and the one that I'm sure created the losers, was this 3M gap up and the dump, let's call it. So that's we used to gap up and go, gap down and go, or dump, but this is a gap up and a reversal after basically a minute, and then trading down more than $10. That's actually from 163 to 150. That's $13. really nasty. That's 8% from the highs to the lows. It actually closed down only three on that particular day. It closed down. Actually, it was Friday. Closed down only 3.65%, but that's because of I don't know if it was a lucky reversal into the last hour of trading, but anybody that was looking for a big win here, meaning a gap up and go, got hit with these huge sell-off bars in the morning session, and that shows that you cannot trust anything. I mean, all you can trust is your risk management. If you had good risk management, you lose here 0.5% to 1%. There's no reason to lose here 8%. So it's all about risk management. Sometimes S happens, and this is the case. I mean, I didn't take this trade or anything like that, but looking back on that, I would have been really upset had I fallen for this trick. And again, it's not a trick, it's a legitimate trade, and what's shameful about it that it's coming when you know, there is a clear, not a big gap up, but a gap up. You expect the continuation. If you enter at 163, it moves up for a split second $1 and then dives down $4. I mean, if you hesitate for a split second or you don't have the stop loss in the platform, you may lose big here, and this is shameful because you don't want to start the trading day trailing a couple of bucks on your position. So that's about the first minutes, and then the trend was clear until late in the day. So there was an opportunity to short. If you acknowledge that this is not the day to be long Johnson, 3M. Then it reversed nicely from the lows, but you cannot guess all those reversals. If it has a trend and it's not long, it's earnings day, things can go wrong if you're on the wrong side of this trade, and it did get nasty. If anybody was expecting the stock to reverse, it took nearly 5 hours or 4.5 hours for it to reverse after 2 p.m. So that's shameful, but we need to learn from this event, meaning it can happen. A gap up is not necessarily a gap up and go. We've seen it so many times this week with PepsiCo, with IBKR, with Schwab. Maybe I think maybe I missed one or two, but plenty of stocks that started nicely and the move higher ended after 3 minutes. So and that's shameful, like PepsiCo. You can check it out later, or IBKR. So yeah, not an amazing trading week. Let's end it up at that. Two beautiful short plays. ABT was amazing and easy to deliver. The round number plays, ASML was also decent. On the long side, Johnson & Johnson, and on the disappointing side, and it was this 3M debacle, let's call it. Okay guys, thanks for being here. Do like and subscribe, and more important, do share this video with your day trading friends. We'll continue to cover the earnings season extensively. Plenty of earnings coming up this week. We'll have a video about it lined up for you tomorrow. So thanks for being here with us, and we'll see you in our next video. One more question for you, or please, if you have, we're asking you, if you have any questions regarding our mentoring sessions, don't hesitate to email us. We have people that for some reason are asking us in the email. We're responding them, and we're not getting any feedback back. So again, we are here for you. We will answer any questions. If you want to participate in this program, in this mentoring program, I'm sure it's a program that took a lot of time to develop. It's a very crafted program, open for you guys. So thanks a lot for being here with this video, and we'll see you in our next one later on today or tomorrow morning.